Perth house prices are on track for record highs by the middle of next year.
The capital city of Perth scores high in every metric InvestorKit uses to measure a market's performance.
Real estate values have gone up hundreds of thousands of dollars in some Perth suburbs.
And remember the mining bust? Where does the mining sector, which devastated the market now, fit into the picture for Perth?
Hundreds of jobs are going and more miners are scaling back hard. It's just part of the grim picture tonight as the iron ore downturn.
Can it maintain the crown of best performing markets in 2024? In this episode, I'll answer all those questions and more, backed by the data you need to successfully enter or not enter the Perth market. And at the end, I'll give you my prediction. But spoiler alert, there will be a few cautionary steps for the next 6 to 12 months when it comes to the Perth property investment market that you don't want to miss. So if that sounds of interest to you, please help the channel out right now by clicking the like and subscribe button. By subscribing and supporting, we can actually deliver more videos to you and keep increasing the level of frequency we can deliver timely insights your way. Let's get into it. To end 2023, Perth's data from chart number 1 is showing, as I mentioned before, the strongest market pressure signals across many of the items. Firstly, when we look at our InvestorKit spider chart, we can see that price performance, rental pressure, rental yield, affordability, and growth cycle are absolutely peaking, like very strong rates of performance. So what that means is when price pressure is stretched out to the max, it does mean that price performance in the short term likeliness is quite high. The same with rental pressure and then high rental yields. This is no wonder when you combine that with the growth cycle, an investor's paradise, because you can see prices likely to rise, rents likely to rise, high yields relative to price, and a growth cycle that offers a strong entry point for capital growth. And then when you look at affordability, it's one of the few areas across the nation where even at these higher interest rates of 5.5 to 6.5, affordability for most of the local market and investors looking to buy there is actually quite strong. Incoming supply has shifted a little bit because naturally what happens when booms occur is a lot of people want to take advantage of that boom, whether it be for building a home and taking advantage of better prices in the future, or whether it be for actually investors and selling them new stock coming on board. This is the same thing that happened in the past booms of Perth as well, and it's probably a feature that's likely to exist. Now, by no means it's catastrophically high incoming supply, because remember, incoming supply relies on approvals, and approvals need to translate to starts to completion, and that in its cycle can take a couple of years for even the most decent amount of approvals in the pipeline. But something to keep an eye on for sure, whilst the rest of the indicators, they're firing away. Something we've been aware of since 2020, 2021, which would likely happen, and something we've commented in the past, saying the data was always good for capital growth, but there are just some things to be aware of as you consider that journey. Now, when we look at part 2, which is the demographic and economic trends, it's clear that the huge lull or drain in migration in the past through Perth's weaker economy is back around the other way in the position of strength. We can see internal migration has recovered. Firstly, it moved from a loss of a decent amount in 2016. And that loss continued to get smaller as the mining boom came to an end, and that mining boom's decline, the bust, came to an end, and that recovery coming back in iron ore prices and just the lifestyle as Perth prices became quite affordable in the previous years started to come back, and hence that migration started to improve. Now, when it comes to the actual growth of Perth's population data, whilst it's not fully available for the latest financial year, in the financial year from 22-23, at that time when we reviewed the data, Western Australia surged substantially. It was the number one recipient of population growth data that we saw, and with WA, Perth's population is around 80% in terms of the capital city. So it's likely Perth took the benefit of all that population growth that occurred. What's clear and showing is Perth's unemployment rate is extremely strong. You can see a big jobs boom that happened like it did across most parts of the country, but it still hasn't fully peaked yet. There's still some very strong levels of jobs occurring in Perth, although the rate of growth is starting to peak. Like most parts of the country, unemployment is extremely strong. In many parts of the country, we do expect unemployment to lift. It's been a thing that we've always talked about. And if you want to learn more about that, there's a previous white paper in our white papers tab on investorkit.com.au/research, we talked about the trends to expect as borders would open and the years following borders opening. And unemployment reduction is one thing that's going to come around, but it'll take some time. It should show up in more parts of 2024. I'd say towards the second half of this year, we should start to see cracks show a lot more. It's already starting to show in the early indicator of jobs advertisements. That has a negative correlation, meaning job ads rise, unemployment start to fall. So on the same flip side, job ads stabilize and or start falling, unemployment will start to rise. Perth's unemployment is still very low, job ads are still very high, but we expect that trend to change, just like it has in many other cities and is going to in many other cities, but still come off a very low and strong base for the coming years. So it's looking healthy. Now, when we look at Perth, we've talked about this in the past, and please, guys, please do educate yourself on this. It doesn't end overnight. Being the top contributor to Perth's GRP and employment opportunities in many areas, mining does significantly influence Perth's economy. The unemployment, as you know, trended up since 2013, indicated a very weak economy as a result of the end of the mining boom, and job ads declined. The subdued economy that was in place, as you can see here, lasted in 2020, and then iron ore prices surged. Now, I'm going to actually show you this tab here, and I'm going to switch over. And when we switch over, you're going to start to see the mining changes in iron ore. This is one thing many people forget. So we're looking at iron ore costs here. And when iron ore, Perth's boom was in the last time, 2012, 13, 14, and following the GFC as well, or just prior as well, the actual iron ore prices were well above the long-term averages that we can see. And then when you see here the decline that happened, they obviously fell off to very low amounts. Many are commentating, hey, iron ore has come off and it's not that high, and so Perth is still growing. Well, of course it's growing, and you can't say it's not that high. It is high. It's above averages. It had a little bit of a dip, but it never reached the lows and sustainably stayed there because we did not have a bust of it in recent times. We had a drop off, but that recovery was quick. We had a drop off and that recovery was quick. Where the bust that happened was when it was low for many, many years and declining deeply for multiple years as well. And so right now, Perth's iron ore prices are fine, and that's why as well it plays a part in the overall assessment of the economy. But as long as these are having quick recoveries like this and remaining above, that part of the economy is going to remain pretty healthy and strong. Now, this isn't like it's the only part of the economy. Remember, you are over 2 million people in the city, but it's just something to know that it doesn't disappear overnight. If a few years of subdued moments here does not industry-wise diversify things all of a sudden. Things of diversity take time, and when something represents some of the largest capital and economic outputs, they don't just overnight disappear. So it's important to know that all that thinking of Perth's house prices are growing whilst mining is low. No, mining is not low in Perth. It is still at strong numbers and levels. And this is just one chart to show it. There are obviously many other charts that talk about it in healthy levels. I've said this in many podcasts in the past. I've said this in debates in the past as well. Perth will grow. Been saying this for a few years. And Perth will do well. But it's the simple point you must understand here. There have been many markets across Bundaberg, across Adelaide, regional South Australia that have achieved just as good capital growth as many parts of Perth during that same time period. And as you know, we've been some of the first to point out the regional parts of Queensland still had earlier phases of the cycle. And now many people are following along there. And so we're here first in those markets, getting the growth of those markets whilst people are competing in those extra hot markets. So that's just something to be aware of, that there are other choices that can happen when people are looking at markets like Perth. It doesn't have to be the only choice for you. But from a data perspective, it always has been in the last couple of years. And as you can see now, it's still very strong. Now, when we're looking back at the chart 4 shows some really strong trends to be seen. Days on market continues to fall after stabilizing a little bit. It's back down again, and more heading down ahead is expected, and prices are expected to continue rise, and in 2024 looking like a strong year of rise ahead. Going down into the undervalue of Perth, it's another thing that we've talked about. So, Perth houses are not only perfectly affordable relative to local incomes, but even if you grew interest rates to 6.5%, it's actually still affordable for local incomes and interstate incomes. So it's no wonder it's been very attractive to investors all across the country because of the affordable prices. We can see inventory continues to trend down, and inventory has that correlation with prices rising in the short term ahead. And we can see that's led by sales volume still being pretty stable, although a little bit low in recent times, but that's seasonality too. But they've been pretty strong, and listings remain extremely low, and inventory continues to fall. All the signs of a hot market when it comes to demand and supply. If we look at long-term supply, you can look back to the last mining boom finishing, and that was a big part of Perth's weakness too. That boom created so many people, developers, construction, people selling this and people selling that of Perth, and naturally that created a huge oversupply. That supply calmed down as the boom started wearing off because less people wanted to build and sell a build product or invest in building in a market where the prices are declining rapidly. And this is why you do see seesaws and swings. And this is why I'm saying that you are seeing performance now, because the economic shift flows on to many other parts. It's a yin and yang. And here's a point to really bring home and understand. When you go back and you see economic weakness, all the trends will start to suffer for some time. So for example, less construction happens. Less construction equals lower future supply. Then days on market increases, it equals prices declining, with vendor discounting increasing too, prices declining. So affordability improves. Then you start to see investor activity disappear in the temporary and builds show up, so that vacancy rate sky high increases and people move away, migration outside and going away increases. So then that way more people are leaving, more rental properties are available for rent. But then all these trends start flipping, even in a weak economy that's having that impact. When you see supply start to fall down, naturally it means there's going to be a future time today where that city becomes undersupplied. Now this increase here, this was just a sugar hit across many parts of the nation, as you can see with the nation's high benchmark line. This is because home builder took place. But guess what? Perth's supply trends are back low again for future supply. So it's not looking good for property buyers in terms of the competitive side. It's looking amazing for sellers, and it's looking for those who have bought well. We'll start to see capital growth continue, especially as future supply continues to trend down, whilst established supply remains low as well. Perth had the last 5-year growth, obviously not the last 3-year, but the last 5-year growth period showed a weak performance in Perth, and that's changing massively. However, the last 10-year growth was extremely weak. So this boom that we're having could last for a couple of years and see Perth prices come back up to the capital city averages or even surpass them. And so there is many years left ahead in this cycle at face value, unless some major economic disruptions come in and change that. But from a growth cycle, for it to come back to long-term averages, there's definitely a lot of gas in the tank. As we go through rental market trends, rents are rising, vacancy rates are extremely low, and rent rises are expecting to continue to happen as rental rises have been at double-digit rates, so they don't just fall off immediately. Vacancy rates remain very low, and we can see as well that rents still have some room to grow when you look at the actual long-term price trends coming back to capital city averages. I won't miss the chart 9. This is a critical one, rental yields. Investors in Australia are loving how good the rental yields have been, because when you're looking at the capital city benchmark, you're talking about a major city with yields substantially above the capital city benchmark. And to show them still rising or at least stabilizing is phenomenal rental growth, because it means the capital growth has been so strong and yet the rental growth has kept up. And so to that yield being that much higher, I'd expect that this yield will eventually return or get closer to averages of capital city markets. It'll always be higher because that's the nature of the Perth market, but it'll return a little bit back to capital city averages, and that'll be one of the earlier signs of the yield starting to be a little bit off-putting for investors of the future. But for now, it's no wonder many investors are jumping into this market because the yield is extremely attractive to them. Looking at this rental long-term price trends I talked to you about before about the rental cycle, it's also still got a lot of legs in it. It's below the capital city average. And if you see low rental vacancy rates like it has been, if you see rental yields as strong as they are, it's likely that this rental growth continues, but the price growth is likely to be faster than the rental growth based on what we're seeing. So overall, what do we expect over the next 6 to 12 months? It's experiencing very high market pressure, low inventory, declining days on market, low incoming supply, and low vacancy rates. That incoming supply changed a little bit, but we see that stabilizing again. So it's back to low times ahead, which should strengthen that last part of the market performance chart to be a perfect star of that spider chart. So it means it's going to be very strong. And so what we're seeing is that you will continue to see strong capital growth in Perth over 2024. I'm expecting perhaps even double-digit percentages based on all these trends, because there are extremely strong trends at play. However, like always, the data is clearly showing that you cannot just assume an economy diversifies overnight. It doesn't. Measure the economy in multiple ways. You can measure it on output value. You can measure it on the buildings in the CBD, the largest ones, who are they and what they are. You can measure it on historic performance. You can measure it on iron ore price points. You can measure on many other variables. The key thing to understand is awareness. And that's all I've always been saying about this market. It's always been a good market to invest in over the last few years, and I've said that before, and I'll say that today. It's going to continue to grow as well based on the current market pressure trends at play, but it's just awareness. Do you feel comfortable with the parts of the economy that have this shift that can occur? And if so, is your portfolio well versed? Be a great market for portfolios with multiple properties in them across other markets, because then they can have a slice of that and still have many slices of others. And or do you know of other markets that are producing earlier cycle opportunities, like the likes of regional Queensland I've mentioned, that are seeing growth but in their earlier cycles, or other markets in regional SA that grew just as much, or Adelaide that grew just as much, except for just the most recent parts of the year, and you have that without those economic thoughts or concerns. Look, every market goes through major ups and downs, including those ones like Sydney and like Melbourne. It's just about your awareness growing as an investor, not just about property trends, because that can show you that Perth is hot, but also about economies, diversity in a portfolio, the right pieces for your comfort zone, the right pieces for the markets at play. And if you can balance that out, you can make a really good decision in Perth to buy there, but you can also make a really good decision to buy elsewhere and see your portfolio grow. This market definitely has some strength and legs ahead, and it's just about your awareness and your growth and your learning to make the best decision for you in your portfolio. You'd think that's the end, but it's not, because Perth is the 5th city we've examined in the Market Pressure Review series. There's actually 4 others which can run you through the exact insights you need to analyze a potential property market, and they're up on the screen right now. Furthermore, if you'd like to get a hold of all the insights, charts, and graphs you've seen in this particular video, make sure to click the like and subscribe button, then look in the description where I've provided the link to our research report on this topic, and I'll see you in the next video. Enjoy.